somewhat understand was night only and day only, and we're going to then compute the night returns. So I'm going to say, hey, please give me some simple bullet points. So day return is actually a little negative. We can see that. So let's go for it. Hello everyone, my name is Mohak, and today's video is about ChatGPT and its use in quantitative finance research. In today's video, we are going to take ChatGPT and do something very interesting with it. In the last approximately 3 years, the world of quantitative finance has changed. Yes, a lot of packages, a lot of new technology, a lot of research has been published, but the LLMs like ChatGPT and the likes of it, they have changed the world. What could not have earlier been done in a matter of days can be also done in a matter of a couple of hours or a few minutes also. This is because these LLMs are helping us. And I'm going to show you that if you are a beginner quant and you find certain things intimidating, you don't know where to start, you don't know how to take up a project, what is the idea behind it, and how to actually go from the idea to the Python implementation. This video is for you. I'm going to show you how you can do all of that. We are going to take a research paper. We are then going to ask ChatGPT to help summarize this research paper. As a next step, I will ask ChatGPT to give me a flow diagram. How could I actually go through the entire process? And this flow diagram would also help me to not just go through the process of Python implementation, but it is going to give me the specific code in every step of the process. In the end, once we have everything in front of us, we are going to derive some inferences from this research. So let's get to it. I'll tell you what I did. I went to the SSRN website, where obviously you find a lot of research papers, and I actually typed anomalies in US equity. So anomalies would be obviously a large number of research papers. As you can see in front of you, it is about to appear 1 to 100 of 10,000 papers. There are 10,000 papers, if not more, written only on the anomalies in the US equity markets. So I scrolled down, I found, I searched, and finally I had come to this particular paper called the return differences between the trading and the non-trading hours, like night and day. So in a nutshell, is the night returns versus the day returns. Okay. So over here, you could open this PDF in the browser, or you could also choose to download the paper, whatever you want to do. You ultimately take a look at the paper. And what I did was I found it to be a 48-page paper. Now, as a beginner quant, if you look at a 48-page paper, the first thing you're going to do is, no, I'm not going to read that. You actually have to go step by step and read every bit of it in real world. But with the power of ChatGPT, what we can do is we can make our work far more efficient. So I took up this research paper, and if I were to do it very rigorously and take number of hours or some days to actually go through each and everything and actually encode it, I would have to go to a long drawn process. And for a beginner quant, if you're doing this, then it can be crazily intimidating. It can be daunting to actually see so many formulas, so much math, so much text, so much financial literature, which is actually so many years old that even the English may be of a different style. And then you come across many tables, many graphs, and perhaps a lot more formulas, and even in some cases some programming codes. So what you do is ultimately, after scrolling all this, I came across only one particular graph which I could somewhat understand, was night only and day only. It says the growth of $1 investment in night returns and day returns. So this is showing me the night returns versus the day returns in one graph. So by and large, this particular paper is very, very intimidating, and I want to make my work shorter. So what I simply do is I go to ChatGPT. First, I've already downloaded the paper, so I would recommend you first download the paper in your machine, and then you upload the paper. So that is what I'm going to do. I'm going to upload the paper. Here we go. I'm going to talk to ChatGPT, have a look at my interaction, and let's see where it goes. can you summarize this paper for me? As I said, the first step is that we ask ChatGPT to summarize this entire paper. So it gives me the name of the authors. This paper was ultimately published, I think, in 2008. The entire study spans across 1993 to 2006. It decomposes US stock returns into day, open to close, and night, close to open returns. So let's just pause and think. Day, open to close. That means today, if I see the market open at a certain price and then close by the time market is closing by the end of the day, so the difference between open and close is the return I'm getting in the daytime, in the trading hours. And then says night, close to open returns. So close to open would here refer to the previous day's close and today's open. Guys, very often we see that there is some sort of a gap up or gap down. Markets are never sleeping. There's a lot of economic news, there's a lot of things which go around in the world, and sometimes, if not many times, the markets actually give us some returns, or positive or negative, just by opening higher or lower. So the night returns would be close, previous close to today's open. Okay. Using transaction level data from 1993 to 2006. So it seems like there's a lot of work which has gone over there. The key findings are being presented over here by ChatGPT. Nearly the entire US equity premium comes from overnight, close to open returns. Interesting. It says that the daytime, that is open to close, as in the trading hour returns, are on an average zero or even negative. Okay. The pattern holds consistently across these various index futures, ETFs, and such exchanges and the various instruments. It holds consistently across the days of the week, the months, and the years as well. So this is, I think, the major crux, because these are the key findings. And then it discusses certain notable patterns. A strong negative return in the first hour after the market open, and gives me some more long drawn conclusions. Okay. I'm going to ask it to just give me some simple bullet points. So I'm going to say, hey, please give me some simple bullet points to understand this. It says absolutely. Here is a set of simple clean bullet points. Okay. The paper studies US stock returns during the trading hours and the non-trading hours of the night. This is something we understood. It finds that almost all stock market returns in the past decades happened overnight. All of that. Positive returns occurred every day of the week. So if you calculate it from day to day, and then you calculate it from month to month, and there is a lot about risk and volatility differences. I have something about liquidity or transaction costs also, and the earnings announcement timing, the classic weekend effect. So again, it is not making it too simple. I think I should ask you to simplify it a little more. Because if you're going to implement this on Python, transaction level data is not something which I have immediately right now. Simplify a bit more. As if I am a beginner quant. Okay, so as if I'm a beginner, I'm asking to simplify. The simple bullet points are here now. I think by and large we have already understood what the major crux of this particular paper is. It focuses upon night versus day returns. So the conclusion we want to actually get to is the conclusion in the paper, as we could see in that particular graph itself. So this is the graph. Yes. This is the conclusion which we want to see. We actually want to see that after whatever Python implementation I'm going to do, I should ultimately see that for a particular instrument or a series of set of instruments perhaps, the returns on the night non-trading hours, the night returns were far greater than the day returns. So let us begin. So as the next step, I'm going to ask ChatGPT to create a flow diagram and help me implement this in Python. Please create a flow diagram helping me implement this research in Python. Just the flow diagram. Let's see what it comes up with. This is the flow. We start. We first download the price data with the open and close prices, of course. We calculate the previous day's close. So we're calculating what the previous day's close was. And we're going to then compute the night returns. Obviously, because from previous day to today's open is the night returns. Then we compute the day return, which is from today's open to today's close. Perfect. And then we combine these returns into a data frame. All right. We plot the cumulative night returns and the day returns separately. Night returns and the day returns separately. And we compare the total returns. Okay. Both day and night total returns. And then we check the percentage of returns for day and night. And then it decomposes the returns to for the first hour, midday, last hour, etc. So this is something which says that open to 10:30, then midday 10:30 to 3 p.m., then last hour 3 p.m. to close. Interesting. So this is something I have to decompose the day returns into 3 different periods. But I'm not sure if I'll get that level of data or that frequency of data when I could go so deep. Nonetheless, visualize the results, whatever the line, plots, bar charts are. Interpret findings and compare the paper insights. Perfect. It says, would I like to go and translate this into a code step by step? I would say yes. Help me code this. Step 1, please. Now to implement this, I'm sure all of you who are watching this could do this yourself, but I'm going to just show you how you could go to the Google Colab, and using Google Colab, you could actually open a new notebook. Okay, new notebook in Drive. So this is something which is going to be saved to my Google Drive. And once this is open, I will begin with a clean slate, copy and pasting everything that ChatGPT asks me to do. Okay, so the step 1 is to download the price data. It has given me a particular block of code, and I copy this, and straight away I want to paste this over here, and let's run this. Let's see what we got. Okay, so we have tickers SPY gold, start date 2020, end date 2024 December, and then we have this code, and we finally got all that stored in data, and it says inspect the columns to confirm the structure, data dot columns. Okay. Let's see what's got next. It says after we got data dot columns should look like this. Is it looking like this? Let me just check. Yeah, it is looking like this. Perfect. Once you run this, just drop go and we'll move to step 2. Perfect. Let's type go. See where it goes. Right, now calculate the night and the day returns. The night return, as we've discussed a couple of times, open and close difference divided by the previous open and previous close difference, night returns. And day returns would be today's close minus the open. So all of that is there. Let me just copy and paste this. And it says this will cleanly add previous close, night return, and day return. So there we go. Pasting it over here. Perfect. It says print tickers 0 dot head. So tickers has 1 and 2 items, 2 elements in this list called tickers. Tickers index 0 would be SPY. So this is, I guess, only for SPY. And it says that I should go S for SPY first. So we have got our returns. We can clearly see that night returns and previous close is not available. Night returns, so the first row will not be available. But let's see what ChatGPT does to that. Okay, and then we go to step 3. Alright. Plot the cumulative returns. So compute cumulative returns for both night and day returns. Plot them to visualize and compare the growth over time. It is also importing matplotlib over here. Looks like it is going to plot using matplotlib. Control V and voila. Let's see what happens. So it says initialize your plot, and within this initialization, it is running this for loop, and then it says for ticker in tickers, and then it calculates something, and let's see the end result. The end result is a plot. Now let's go back and see what it calculates. It calculates 1 plus data night return dot comprod. Okay, so in our previous steps we got a night return and day return on percentage basis. It's doing 1 plus and then dot comprod, which is cumulative product, all that put together in two different ways for two different tickers, and ultimately plotting 4 different lines on the plot. These 4 different lines also have legend. So this particular red line is the GLD. This is for gold. GLD day return. So day return is actually a little negative. We can see that. And GLD night return is this green line, which seems to be giving me the highest returns in this time period. SPY day return is this orange line, which I can clearly see go from 1 to somewhere between 1.2 and 1.4. This is not that bad. And then SPY night return, which is again beating the SPY day return. Okay. So we see that gold has got a significant difference, although SPY also has got some difference by and large, but overall for both instruments the night return actually wins. Perfect. Maybe ChatGPT is also wanting to show us what the exact numbers are. Right now it's just shown the plot. Let's go to the next step. Let's type go. Okay, and I must tell you that the time period that we took was from 2020 to 2024. So we're going to go and experiment with a certain different period of time as well. Okay, now it says summary statistics. Perfect. This was the workflow. Now that we've got our various vectors of the night and day returns, let's summarize them with the metrics. We've got everything over here. Let's copy this, and this should give you a clean summary table with the mean returns, SD, and so on. So let's go for it. Control V. It's creating this really nice looking data frame. Here we go. So we've got ticker SPY. This is the mean returns, night mean returns, day mean returns, the standard deviation for the night and day, and then the CAGR, the compounded annual growth rate. Okay, so we can clearly see that the night returns significantly beat the day returns in both the cases. Perfect. Now let's go to the next step. Bar plots for summary statistics. We create side by side bar plots for mean returns and CAGR. Let me just copy this and see what ultimately getting over here is this. Perfect. Now it is importing Seaborn as SNS as well. So I'm going to be using the Seaborn over here as well. 1 second. So we've got a bar plot, shows the mean returns of the day and the night mean returns. So for SPY I've got the day and night mean returns. As I told you, the difference wasn't much, but still the night returns are higher. For gold, the night return is doing most of the work. The day return is actually negative. And then we have the night versus day CAGR. So the CAGR is going to be the compounded annual growth rate. Obviously, it is going to be very similar to the cumulative return because of the overall time period we're looking at is kind of just 4-5 years. So yes, so this is interesting. We see that the night mean returns, the night CAGR are kind of everything. This wins, night returns win. That's it. I mean, we got this. Now, this wraps up the clean implementation of the core analysis. ChatGPT itself says that. Would you like to add cumulative return line plots with shaded volatility bands, year-wise breakdown, a final report summary for CSV or Excel. So I think I'm going to stop here. But one thing which I can do is I can at least ask for this bit. This is something I want. Yeah, I can ask it for at least the cumulative return plots with the volatility bands. All right, perfect. So let's see what code it tends to generate. The cumulative return line plots with shaded volatility band. All right, here we go. Just paste this over here. So this is kind of a lot of analysis going on over here. It says incomplete input. I hope I have copied this successfully. So here I see that the rolling volatility is being calculated. Volatility band. So we have rolling volatility, rolling.std, and the window is a 20-day trading window. So 20-day trading window, volatility calculated for the night returns and the cumulative night returns, both put together in a certain plot. Okay. Then we have the cumulative day returns. The day volatility again calculated with the 20 period because window is 20. And this again plotted. So here we go. This is the SPY night return and the SPY day return. So this is cumulative returns with rolling period. So this seems to me that this is the night return and the day return only for SPY. Let's move on. See, this is the night return and day return only for the price of gold. Right, perfect. So cumulative returns with rolling 20 volatility bands. I don't see any bands. I kind of get confused because the band should be visible. So let me just look into it more closely. Maybe there are bands inside. So in that case, I would have to actually shorten the data itself. So I can't see the bands. Let me ask it how I can see the bands, right? I mean, I know how I can see the bands. I want ChatGPT to do this. Okay. I cannot see the bands. What's the solution? What's going on? Why are you not seeing the bands? Night volatility is like 0.005 per day. So the problem is that these bands are actually small because the standard deviation is small. The night volatility is typically tiny, like 0.005 per day. Multiplying it directly by cumulative returns barely moves the line at all. So your shaded band overlaps exactly, which is making it invisible for your eyes, which is understandable. It's not a problem. Okay. Then it's given me corrected code for visible volatility bands and how it is fixed the problem. Apply volatility band is a percentage band relative to the cumulative return. Let's see if something happens over here. Let me just paste this as it is. Okay. Seems like I still don't see these bands, but I see slightly better. I can see this haziness around this over here. These are the volatility bands. So this haziness is a little bit more visible. But it is true in saying that because the number of data points are so much, that fitting them into a plot in a way that we can see a small difference between the cumulative return and the band is going to be difficult. So understanding the fact that the volatility is low, this is happening, quite understandable. So let's come to conclusions. So let's say, thanks, I got the desired results and the research paper also aligns with my inferences. How can I use this inference? What are the possible applications of this? So while this is thinking and giving me the answer, allow me to just take you back over here and suggest to you that when you are doing such research, maybe you can ask ChatGPT to make the code a little fungible. That means maybe it can make functions out of it, and it could take ticker list or list of tickers as a input in the function, and then you could try it out with different assets, different instruments, maybe some popular stocks, maybe your favorite stocks, and maybe you could go to different time periods and check out all of this, how this happens, right? So since it's calling tickers with a fresh variable definition of tickers again and again, that is why I'm not going back and doing it, because it's very likely that my code will not run. You see over here it has defined tickers, and then again over here it has defined tickers, and then maybe in other places it has defined certain things again. So this experimentation could best be done with functions where the parameters once given would actually permeate into the other functions as well. The encoding needs to be modular that way. So given that, you should experiment. I highly recommend. So coming back to what I asked ChatGPT, this is what it gives me. It says that intraday strategies are a place where I could use my inferences. Portfolio construction and risk management, I'm not reading everything in detail right now. Volatility and tail risk assessment, algorithmic execution and market timing, cross asset and multi-market analysis, and signal engineering. And I'm sure if you just take one of these points and dive deep into how you could use this night versus day return inference in any of these particular fragment of the answer, long answer which it gave, any of these particular subtopic, then you would definitely get some more interesting answers. So in summary, your Python implementation becomes a robust quant research tool to test, refine, and deploy strategies, exploiting intraday return dynamics. You can automate the pipeline for different markets, timeframes, and instruments, a powerful edge in quantitative trading. If you want, I can help you. And it is ready to help me with some very interesting things as well. But this is it for today. We are going to call it a day. It was a very, very interesting session where I was able to actually ask ChatGPT everything. And let's say within a matter of about half an hour, we could actually go through what this research paper was telling us about and actually implement it on Python. I would recommend you to go by yourself, do some Google search or search on the SSRN website, find out about more such papers, try and upload them into ChatGPT and ask for inferences. Whenever you get stuck, copy paste the error to ChatGPT, ask it for the corrective steps, take a recourse once or twice if required at all, ask it to simplify and summarize, and I'm more than sure that you will get to learn a lot and leverage the power of AI, leverage the power of these LLMs in your favor. Thank you so much. I'll see you in another video.